I'm going to share how I, as a beginner, have found confidence in a simple trading plan, a plan which I believe I can gradually increase profits over this year, no matter what the market does. And I'll show you both the good and bad side of this approach. My approach is purely discretionary, and I'm introducing nuances as I learn more and gain more experience with real-world trading. Hopefully, you can take away something to add to your trading system so you can experience profitability this year. Knowing yourself as a trader is important. As mentioned in a previous video on my overall crypto strategy is personal. For me, a game I've gravitated towards is discretionary futures trading on a centralized exchange. By using leverage and following my own risk management rules, I was able to be profitable and have confidence to remain profitable for as long as I trade. We'll go over some of my most unbreakable rules to crypto trading, then show you how well I was able to execute this system. Let's start with the rules. The first rule is to always visualize the trade ahead of time. I always use the long or short tool on TradingView to see if there is room for it to play out. If it's not obvious to me, it doesn't exist. I'd much rather not force a trade with bad dynamics. Since this is a discretionary approach, experience here matters a lot. Since I don't have a lot of experience, I rely on other rules to help me learn and grow as a trader as much as possible. Besides visualizing the trade, I write everything down. Write everything down and review your trades. I use these red notes to write down my thoughts and reasons behind a trade I'm about to make, or as the trade is progressing. If it's hypothetical, I switch the color to green to help me differentiate it. If there's any hindsight, I'd go back and edit these notes so as to learn from my mistakes and missed opportunities the next time I look at this chart. I also use a simple journaling system, one line per trade taken in this section above, and one line per hypothetical trade I'm testing out. I've set up my journal to include trading fees from the exchange I use, so it's reasonably accurate. To begin, I always start with the bottom section here, where I can input the entry price, take profit, stop loss, amount, and leverage. This helps me figure out my cost, max loss after commissions, max gain after commissions, and estimated reward to risk ratio, RRI. The rightmost column is reserved for notes to explain what happened and any lessons learned. Start tiny on each new change. When I begin trading a new pair, or am testing a new leverage, or when I haven't traded in a few days, or after a significant macro event, I always start off with a tiny trade, something with a max loss of $10 to $20, so that in case I'm wrong, I don't lose very much. Humans are emotional beings, and we can get very irrational and act rashly if we don't plan ahead. So you can use a number that's comfortable for you, such that you wouldn't cry too much if you accidentally left it on a taxi, for instance. And now, I'll show you in detail how I trade. My futures trading system operates on technical analysis and not so much on fundamentals. It involves finding high probability price action, confirming it with factors of confluence, and being smart and disciplined on entries and exits. For technical analysis, I learned the theory from someone I stumbled on Twitter. Following his lessons, I was able to equip myself with enough TA knowledge to be reasonably successful. You can find a list of all the lessons in the video description below. I've compiled it in an easy-to-follow Notion document. It'll take you about a week to cover all the topics there. From scratch, you can expect to be somewhat competent within 2-3 weeks of trading tiny amounts using this new knowledge. Give yourself time to improve your win rate and confidence. In order to find trades, I have to look at the charts. Remember, each chart represents a trading pair or a market between buyers and sellers of that pair. Each pair has their own unique characteristics, so it's important to take time to get used to new trading pairs. For me, high trading volume is a must. This is a signal that there is a lot of liquidity and that prices are less erratic. Usually correlated with high volume is a large enough market cap. Trading these pairs increases the overall difficulty for a single whale to manipulate prices. For me, this is a no-brainer. Bitcoin and Ethereum against USDT. It's tempting to go for smaller caps as they have larger swings. Be patient and stay away from these. You can make just as much money with trading large caps alone. Take note that any asset mentioned is not an endorsement to buy and hold at any time, as that is a different game altogether, which requires a separate conversation. The most fundamental concept for me is to be able to identify key levels. Refer to the lessons I mentioned in order to do a deep dive on your own. For a level to be valid, there should be some clear price reaction observed in the last visible range in your time frame. These levels are estimates of supply and demand zones and act as support and resistance in our technical analysis. The key understanding for me was that price can either go past the level or bounce at the level. There are no other choices. And you need to enter in the direction that's more likely, and enter at a time when it's statistically more likely than not you'd win. My current understanding is that as long as the confluence factor is an objective measurement, not something you draw by hand, it counts. I haven't yet found a certain confluence factor to be overwhelming convincing versus others. From my experience, on balance volume, OBV, divergence, volume profile fixed range, and the EMA are sufficient tools to form an opinion on price action. I'm still learning, so expect more to be added to this list. Each of these deserve their own video, so be sure to watch for those in the future. The key to my entry is to anticipate. I always do limit orders and not market orders. From experience, I've found that anticipated trades tend to work better than in the heat of the moment trades. FOMO is very powerful and can steer you to a suboptimal entry. You may still escape in the end, but will suffer while your trade is underwater. For me, it's better to lose out on trades that never get filled than to have an order filled with a bad entry. Take profit should almost always be predefined. You can set up multiple take profit points based on the most obvious points. For example, the next level, or nearly there, the last high or low, etc. Because this is still a discretionary approach, there's a whole art to determine the right exit points for you. I've been wrong and profitable and right and unprofitable. All that matters is that at the end of the day, your P&L is protected and is going up steadily. The only type of management allowed would be to move your stop loss to break even, or to a point where it gives you a slight profit. If you're doing anything more than this, you're exposed to your own emotions, and your mistakes will cost you dearly. I'll cover this in great detail in one of my biggest mistakes later in this video. Recent price action is more relevant than past price action, so if I find price reacting to a slightly different level than the one I drew, I'd consider adjusting the level to match that. I'd only consider adjusting if it's obvious and in the same time frame as shown here. There is a caveat to the system. A pro trader once told me that markets tend to trade in ranges or go from one range to the next. Most of the time and in other times mark a strong up or down trend. I've learned that the above system works well for range trading, but does not do so well in strong trending price movements. I'll need to look at how to incorporate some aspect of trend following into my trading system sometime later. Now let's take a look at my performance so far. At the time of producing this video, my profit and loss, P&L, is up 11.4%. I've also noted that I'm better at trading certain pairs and not so good at trading others. This is an important lesson for me. There were several great trades. I'll focus on one where my execution was sound and followed my trading rules to the T. This was the Ethereum USDT short I made on February 8th at 1 a.m. If you're wondering if I was awake during that time, I wasn't. It's why I love this so much. The anticipation paid off. I suspect traders more experienced than me are doing this all the time. Notice I could have only taken 50% at this level and let the remaining portion of the trade to run. It could have been a massive trade for me. And now for some lowlights. This is going to hurt. But I must share with you my biggest mistake so you can avoid it yourself. First, I got greedy. Seeing a couple of wins in a row, I felt invincible and decided to increase my size, my risk, and the number of trades I open at the same time. Looking back, this was totally unnecessary. Just one trade, with proper adjustments, would have been more profitable for me than having 3 trades poorly entered and managed. What happened was that I was trading a break and retest of an hourly level. A thought of greed popped in my head where maybe I should trade FTM, Gala, and Lido, as these tended to react more violently in the same direction as Bitcoin. Keep in mind, these are perpetual futures. I'm not holding any of these in spot. First, for FTM, I read the break and retest incorrectly, as ideally you'd want to see an obvious move away from the level, not just one candle as you can see here. This misinterpretation made me unaware that the underlying supply and demand has shifted the level up to here. This led to a really poor entry, poor stop loss, and eventually I was stopped out right before it went my direction. Ouch! Then for Gala, I risked too much, and because I had the same problem as with FTM, I gave up after 2 hours of being underwater. This was an even more volatile pair that I had not prepared for. Thus, my normal stop-loss levels for BTC did not apply. Guess I lucked out there by giving up early. Double ouch. Finally, for Lido, I had done everything right. I had marked the levels precisely. I had taken a nice enough entry that gave very positive P&L for 9 hours, and yet, because of the chaos from the other 2 trades, I completely forgot my own basic rule and did not move my stop loss to lock in my profit. Then, because Bitcoin made a move, Lido jumped, and all of a sudden all my unrealized P&L were gone for this trade. I was not in the right state of mind, and it felt too painful to see another trade in the red. I gave up and took a loss. As you can see, this was the worst possible thing, as the price respected the level I'd marked and would have realized my full take profit target. Because of those huge mistakes I just mentioned, my performance so far has taken a dip to 11.40%. Honestly, it could have gone higher or lower, and I would have been fine with that. I'm here to learn, practice, and then earn. In future videos, I'll go over practical examples so you can follow along on TradingView to learn this for yourself. I hope this video gave you enough insight on a crypto trading plan you can use on your own. I'm learning how to be a better trader every day, so be sure to look out for more videos in the future that go into more detail of what works and what doesn't. When you exercise all the risk management rules covered in this video, you will gain more and more confidence around being profitable in your futures trading. You'll be able to withstand multiple losses in a row, like I have many times, and yet not be completely wiped out. Trading small is a necessary precursor to trading big. It takes the same level of knowledge to trade any size, but it takes way more emotional discipline to trade big and not make a mistake. So be patient and know that as long as you follow a profitable trading plan, your reward will come. Well, this was really fun for me. I hope it was fun for you. If you liked this video, consider sharing with a friend. What was the biggest takeaway for you? Let me know in the comments. This is Smart Crypto, and you've been so awesome to watch until the end. See you next time.